Was it interest rates or the Memorial Day weekend that caused a pause in our real estate market? We're going to talk about that today. Hi, I'm Tony Meier with Windermere Real Estate. For 34 years, I've been an avid study of the real estate market, and I'm going to take that studied information and distill it down into actionable intel so you can make a decision this week on the real estate market and your involvement. So we're going to be talking about rates for sale and pending, months of inventory, and median price, help you understand how the market's shifting. First up is interest rates. Well, if you've been paying attention, rates have been on the increase. Thankfully, we saw a drop this last week. It does look like there'll be a settlement on the budget, and that has been the pressure on interest rates at this point. So hopefully we'll see rates start to sneak back down, although I did see just recently some talk that the Feds may be needing to raise rates again, not in June, but in July. So we'll see what really happens with rates, but I think the higher rates are with us for the most part for foreseeable future. And you can see that we're up near our 52-week range of 7.37, currently at 6.91. We're getting closer to the top than we are the bottom of what we've seen over the last year. So be prepared for that going forward. Next up is active listings. Well, this is really the interesting number when you look at where we're at. We would normally expect, given the 9-year average, to be in the mid to upper 900s in May, and we've been averaging the mid 500s all month long. So inventory is not abundant, and we're not seeing any real change to that, and that's really kind of one of the things that's been supporting our market. Buyers have been hoping prices would drop, and they just haven't because of a lack of choice. Next up is pending sales. Well, it was a holiday weekend. We did drop off in pendings, but we're also statistically down from where we would normally see pendings be, matching inventory being down. We'll talk more about that when I come out with a month-end review video next week, so watch out for that. Our months of inventory ticked up a bit. We dropped down as low as 0.8 of a month in May, and we're sitting back at over a month of inventory, 1.09, which is still favoring a seller, but certainly not as strong as it was, and interest rates are going to really be a key factor to that. Last up is our pricing. So we dropped off from last week's peak to $1,380,000 this week, down 7%. We're still down 8% from 2022, but a heck of a recovery given where we had been down as much as 30% earlier this year, year-over-year numbers. I do think that we're going to kind of remain flat when we see May's final median price after 4 months of strong appreciation. We may only see just a little bit, if any. Again, look for our video next week. So if you've got questions about the market, you can leave us a comment down below. We will be happy to talk to you about specific neighborhoods, not just the Eastside stats, so you can make an informed decision on buying or selling in this marketplace. If you like what we have to say, please hit the like button. That helps our YouTube get our video out to other people who are thinking about the same information. And of course, subscribe for future updates. Well, that's it for now, and hope you have a great week. Take care.